Hi everyone, hope you're all doing well out there. Today we're going to talk about 3 stocks that I own that are on fire at the moment. They are doing very well, and sometimes I get asked the question why I focus on my stocks that aren't doing well. I like focusing on stocks that aren't doing well because quite often are stocks that, not just that I own, but stocks that I don't own that are not doing well. Why do I focus on them? Well, the reason I focus on them is because that's normally where you can see the opportunities. You know, when the stocks sometimes are going down, sometimes they are getting over punished and they create buying opportunities, and I start looking at them as, can I buy this as an opportunity? And the other reason is that normally if I have a stock that goes down 10%, I'll probably get like over 20 questions on that stock. The combination of people looking at that as an opportunity, and also a few people look at that as the worried, fear. You know, fear is the biggest emotion in the stock market. Whereas sometimes I have a stock that goes up and I don't talk about it myself, and I'll get a lot of less questions on a stock that's going up. If I have a stock that goes up 10%, I might get only one question, sometimes even no questions on that stock, because everyone's happy with that investment and also there's no opportunity there. The only thing that you're really considering if it's going up is, do you carry on holding it, or do you maybe sell it, or potentially you could buy it? You know, potentially if it's still a good valuation and they're smashing it, maybe you still start averaging up, which is actually, funny enough, one thing that we'll actually talk about in today's video. So yeah, I thought today let's talk about some stocks that are doing really well at the moment. Before we get onto those 3 stocks, I want to just talk about 2 other things. First of all, the Fed. The Fed sent the market a lot lower yesterday. Looks like pre-market, the market is still kind of a little bit nervous on what the Fed said yesterday. And yeah, basically what I said on Monday's video came true, word for word. You know, basically the Fed didn't hike up interest rates as expected. You know, it would have been a shock to the market if they did. They basically said that we are leaving more room to hike up interest rates, which I said that they probably will do. And in my opinion, once again, this is an absolute bonkers decision from the Fed. I don't know why they are still increasing interest rates. They said they're basically going to hold them for longer as well, and the market didn't like it, and I don't blame them. You know, that's what I said all the time. You know, eventually if the Fed keep hiking up interest rates and give them at these higher rates, they will cause a recession, and the Fed will do what they typically do. Even though true inflation's at 2%, and the Fed are using all their lagging indicators like shelter, which is the slowest indicator to catch up with inflation. They like using all them lagging indicators, which is absolutely wrong. When you actually look outside of that, inflation is looking pretty good, but yet they are very slow to react. They are now still putting interest rates up, which is useless. All that's going to do is put pressure on the economy. They're not going to come in for the next 12 months. By then, inflation is going to be below the 2% range. And what will happen, we'll see the Fed as what they historically do, as they've been historically done in 2021, as they did in 2020, as they did in 2019, as they did in 2007. They are slow to react. There's no point having double the interest rates to what inflation is right now, when the only thing that's up is a lagging indicator, which is shelter. It's absolutely bonkers that they're still putting all those interest rates. It's crazy. It's suicide for the economy. And as I always said, this is the biggest threat that I see to the stock market, and it is starting to hit companies' earnings. I was looking at FedEx's earnings, I was looking at DS Smith's earnings. Look at all the marketing companies at the moment. They're saying that all the companies are pulling back spending because they're worried about a recession. That's where we're going. Once again, they're slow to react. They're putting up interest rates when they don't need to. They'll cause a recession, and then all of a sudden they'll go, okay, now we'll start bringing down the interest rates when it's already too late. And this is why, for me, this is the biggest fear in the stock market, and this is why I'm building up cash, because the Fed are once again being really slow to react. But I've covered that enough times on the channel, so I'm going to keep that nice and brief. Next thing I want to talk about just really quickly is the UK inflation. UK inflation actually came down when it was expected to go up. I know it was only down 0.1%, and I've seen a few people go, oh, well, it was only down 0.1%. But the thing is, when you look at oil and what you were expecting it to go up from this, we were expecting to go back up to the 7% range. So this is pretty good. Realistically, it doesn't make that much difference in the long term. It still has a long way to go. And I am recording this before the new interest rates do come out, so we'll see if they do hike up, or if this good inflation news means that they're actually going to keep rates steady. We'll see what happens. By the time you guys see this video, you'll know what is the outcome. But I thought this was relatively good news. And as we've always seen, you know, in the UK, we are very slow for the consumers to get passed on the benefit of oil coming down and fuel prices. You would have seen that every time we saw oil coming down, when you went to the petrol station, that wasn't reflected at the pump. And normally when the oil prices go up and petrol prices are going up, you go to the pump and the next day they're already up on them. And it's not happening at the moment. So I think think that we still will see the UK not doing amazing, and I don't think it's time to get too excited yet when it's 6.7%. But this was, I've got to say, this was a little bit surprised that I didn't see happening. So a little bit of good news there. Now getting on to the three stocks that are absolutely smashing it at the moment. JD Sports is actually up 7% today as recording this video. Very good day in JD Sports. And what happened is Foot Locker was tumbling on the US side of it. We've seen Foot Locker got absolutely slaughtered at the moment. We've seen them saying they're seeing weak demand. JD Sports came out today and went, nope, we're not seeing any weak demand. And they brought out their interim results and they were absolutely fantastic. If you look here, you see organic sales growth of 12%, Europe 27%, North America 15%, and as well as that, profit as well, up as well in this challenging time when you've got inflation, wage pressures. Very, very good results from JD Sports. And this is why I can't buy Foot Locker. I can't buy Foot Locker because I look and go, why waste that money when I can go buy JD Sports? You know, this company's absolutely smashing it on the financials and it's got a better balance sheet, it's got better growth, it's got better profit. I might as well buy JD Sports. They're conquering Europe and they're conquering America. And even if they're doing this well in this time frame, imagine when we get out of this time frame how well they're going to do. And this is a stock that I've owned for about 3 years. Once again, it's a stock that I've owned and I was up over 100% on JD Sports. Once again, another 100% return. I remember taking 100% profit off the table on JD Sports, and from there we saw it absolutely crater through 2021 during that whole Liz Truss kind of period. Then it decided to have a bit of a rally up, as you can see here, and once again it rallied up 91%, and now the stock is falling back down again. And for me, I just think, you know what, if this company is back at a relatively attractive valuation and it's smashing it, I might as well buy it. And I think that is it. You're getting a dividend which is going to be hiked up massively. The company looks expensive at 51 times earnings, but that's because of a one-off charge. If you actually look at the company, what the profit is actually going to be, it's actually around about 9 times earnings on this year. So you're getting a company that is 9 times earnings. The growth is absolutely phenomenal. Look at the growth of this company here. The profit as well is going up and up and up. If we look at the past performance, this is where you actually start to see how well this company is doing. I mean, just look at the growth of this company here as it's expanded into North America. They've absolutely smashed it. You look at the profit, gone from 68 million, 84 million, 150 million, 200 million profit. A little bit of a dip down there during the CV times, as you can see here, and up to 142 million. As you can see, this year they're going to close at 695 million, 700 million in profitability. You look at the balance sheet here. The balance sheet is very good, 4% debt to equity. They're sitting on 1.6 billion of cash and only 113 million of debt. They've got the dividend that they're going to continue to hike up as well. And you can see really why insiders have been buying the shares so aggressively in the last year. It's amazing. So for me, I look at this company here at 9 times earnings. I still think it's cheap. I still think JD Sports should be a premium company. If you've got this balance sheet, if you've got this growth, profit, revenue growth, you're hiking the dividend up. For me, this is a premium company at 9 times earnings. So I just keep averaging up. So for me, it's one of those that I could right now sit on this stock and go, oh, look, I'm up 100%. Oh, absolutely amazing. I don't care. For me, it's all about making money. I look at this stock and I think I'm still going to make more money. So I average up. So yeah, absolutely fabulous from JD Sports. So great earnings, and I'm actively buying shares on that one for sure. Hollywood Bowl, once again, another longer term hold of the channel. Once again, I've been a shareholder for this one for around about over 3 years now. Same again, started buying in the CV times. It's a stock that if I wanted to, I could be up 82% up on this position, but I keep averaging up on this position because they keep smashing it, and I think the shares are still relatively cheap at the moment. Same again, it's got some costs at the moment because of an acquisition it's made because it's expanded into Canada. 4.5% dividend yield. For me, I'm actually picking up around about a 7% dividend yield because of the average that I do have on this one. So that's amazing. Now, every time I get the Hollywood Bowl dividend, I'm like, I love getting that dividend, and I think the growth is going to be still very attractive from Hollywood Bowl. But recently they've had a bit of a bump up, especially in the last kind of few days. It's up over 9%. The reason why is it's actually nothing to do with Hollywood Bowl. They're actually going to probably bring out their full year trading update, as you can see here. Probably the first or second week of October, so it's not too far away. But the reason they're actually moving is because of a competitor, which is 10 Entertainment Group. This is the rival UK bowling company at the moment, and they actually brought their update out. and they saw a really good summer trading period as growth accelerated, and obviously that had a bump up, and that led to people going, well, if they're having a big bump up, Hollywood Bowl, I'm not saying bump up any more times, if their share price is going really well, Hollywood Bowl is obviously they're going to be somewhere similar, and I thought that's true. You look at the UK at the moment, the weather in the summer was awful, as it always is, so that's probably led people to go do indoor activities. That's probably why bowling's doing very well, and Hollywood Bowl should do very well from that, and we look forward to what they're seeing on the Canada expansion front as well. So that's obviously priced in some good results. So obviously when Hollywood Bowl do come out to do the results, they probably, even if they come out with decent results, we probably won't see the share price go up because it's already priced it in. But yeah, it's about time, because I remember only a few weeks ago I was talking about this stock having a bit of a dip. It dipped like over 20% during the period of June and July, and I think in the last stocks I'm buying, the UK side of it, I was like, if this stock ever has these 20% drops, which it does do, I have a little bit of an average up, and that's what I did. And out of nowhere, boom, the share price goes up 20%. It's crazy that out of nowhere, you can have 1 month where the share price decides to drop 20%, and then within the next month it decides to go back up 20%. So yeah, one of those that you take advantage of the dips on, and very happy to take advantage of the dip and got the rewards. And once again, I'm just wait on that, and if it does have a 20% dip out of nowhere, I'll probably nibble them shares once again. But yeah, obviously good news there for what looks like the bowling industry at the moment, and people are still out there spending the money even during this time frame. So it does show you that if you do operate right, if you do operate right as a retailer like JD Sports, you can still do well in this environment. If you do operate well as a bowling alley, well, we'll see what Hollywood Bowl do yet, because they haven't done the full results, but obviously 10 Entertainment have obviously done well in this kind of environment. And last one was Dartrace. This stock I've not really talked about for a long time. I think I've not talked about this since I was buying it probably at the start of the year. One of my best UK performers so far this year. Year to date, the stock is up 50% year to date, and it's absolutely smashing it. And with Dartrace, the stock is up so much in the last kind of year. And I was looking at the results, and the results are still doing pretty well. You look at the growth, they're still growing quite consistently. You look at the earnings, they're still growing quite consistently. And my big worry with Dartrace is that I was worried that companies, I'm looking at marketing and they're cutting back on the marketing. I was thinking, our company's going to cut back on cybersecurity, and that hurts Dartrace. And I was a little bit like, is it time to kind of take the profit off the table in case it gets hurt? But I looked at this and I thought, Dartrace is my cybersecurity play. I think cybersecurity is going to be massive in the next few years. You've seen all these companies taking these cybersecurity attacks, and they're going to look at cybersecurity companies to strengthen up their business. So even though it might be a choppy kind of year, I don't want to base my investment on Dartrace on, okay, they might have a tough year and I might be up on it. I don't want to gamble on that. I'm looking at long term, and I think in the long term, cybersecurity is going to be a winner. I need to have a play in here, and that is Dartrace, and I think they'll do very well. And at the end of the day, if they do have a pullback, I'll buy more shares in it. And it's probably, once again, you look at the insider front and you look at the CEO buying shares in the big dip of £2. Recently, though, there has been a sale, as you can see here. The chief strategy officer has sold some, and actually an AI officer as well. So obviously, maybe a little bit profit taking going off there. So there's part of me that thinks, it is up so much, it might be good to kind of trim it a little bit. Maybe if it enters the 100% return club, maybe that's where I kind of trim a few shares potentially on it. But I think the surge from Dartrace is that people have kind of realised how, I think it got a bit ridiculously sold off after false short seller attacks, and people are starting to realise now the revenue growth is still doing very well, and you think outside of this environment they'll still do very well. You look at the profit ramping up, people are realising how well that profit's ramping up as well, which is obviously really good, which kind of proves a few people wrong. And I think about that about a lot of companies. I look at SVL Capital and I think, even if something like an SVL Capital, for example, even if they have slower growth, but if they do drive up to profitability, then it'll be a bit like a Dartrace where people go, oh, we probably sold this a little bit too low. The key thing with Dartrace is I remember at this time frame going, oh, they're still putting 76 million in free cash flow when the company was like something like a 2 billion market cap company. I was like, that's criminal. It's criminal to put it down that low. So obviously that's been doing very well, and I do look at Dartrace and I do have my concerns, but I don't want to plan my investments over the next year, even if I think the economy might be choppy and companies pull back their spending. I look at the long term and I think, this is going to be a quality business for the next 5 years. Will I ever get the chance to buy Dartrace back at the £2 range? I'm not sure on that one. So yeah, just thought I'd speak about where my thoughts are currently on Dartrace, and that's how well that's been performing. So yeah, hope you enjoyed the video today, just talking about the Fed and obviously still them obviously making shocking decisions. Inflation coming in a little bit better on the UK side, and then just talking about JD Sports smashing it compared to Foot Locker. Hollywood Bowl, hopefully we see some good news from them after their rival reporting some good numbers, and obviously that's already baked into the share price. And Darktrace, I've not talked about Darktrace for a long time, and obviously that's a stock that I own that's been rolling up in the background, and where my current thoughts are with Darktrace. Hope you enjoyed the video, guys. If you do want to see more exclusive content from me, join the Patreon, support the channel. It's only £5 a month, and you get a Discord with 500 members on to talk to about stocks as well, including me. And thanks for watching. Have a great day. I'll see you in a bit.